Hello, everyone. Greg Diamond here with another edition of Diamond's Edge. And this week, I'm going to get into it really quickly. I think that Bitcoin stocks are starting to top out. So I'm going to get into Bitcoin right now. And you can see here, going back 3 years, and again, talked about the rule of three. Talked about 3 weeks, 3 days, 3 months, 3 years. You'll see some type of inflection point when markets move up or down within that time frame. Okay, so what I've highlighted here on the chart is Bitcoin going into the all-time high, previous all-time high, exactly 3 years ago this week. Right, it topped on August or November 14th. Okay, or this week, November 10th, November 11th. And now we're coming into this new all-time high this morning, today, on Monday, with a high into the 82,000 level. All right. So I'm not calling it a crash, but my point is that this is an inflection point. And you can also see with these red arrows, okay, what am I looking at here? It's nearly the exact same pattern from a technical perspective. You had this divergence from the RSI, you had this third lower high within the composite index. That was 3 years ago, and you have the same thing right now, right? Divergence within the RSI, third lower high within a composite index. Okay. Now a lot of people like to look at Ethereum as well. So let's look at that, and let's look at this. People get very emotional about Bitcoin, and I understand it. I get it. Totally get it. But just look at it from a trading perspective. Okay. Bitcoin or Ethereum made it again, this new high, all-time high here, exactly 3 years ago. Now look what it's doing. It's making a lower high, right? Right here. Okay. So, and you can actually see this is actually a negative. Just notice this. This is a negative composite index reversal. So this high to price high, and this high, or this high to this high is higher. So lower price, higher high in the composite index. This is actually quite bearish. So that's what I'm looking at in the crypto world. And then I've been outlining this to subscribers literally for the last week. Let me show you. We can look at the S&P as well. So, we're looking at this natural date in October, and this week. Okay, it goes from the 8th to 11th. I showed you Bitcoin was the 14th. We have inflation data, CPI, PPI. That's going to be important. Is that what changes the view of how this market works? And so you can see here 1, 2, 3, 4, 5. Do we have this correction that unfolds? And a lot of people like to look to the Trump trade from 2016. I totally get it. Totally understand. Going to do great things for the country. The difference is that when he won in 2016, stocks were starting from a bottom. It was, China had just basically crashed. Okay. There's a lot of uncertainty around Brexit, a lot of uncertainty around the U.S. election, blah, blah, blah. So that came from a low point. And now we're looking at this from a high. So it's a little bit different. So at least on a short-term basis, the contrarian trader in me is saying to fade some of the strength and look for a correction, because the market likes to hurt the most people, and what would hurt the most people is a correction within this euphoria after the election that might lead to some volatility within this bull market. And make no mistake, let's look at this from going all the way back to the lows in 2022. This is a bull market. So I'm not saying that we're gonna have some crash or depression. That's not my point. My point is that we're gonna have a correction within this bull market. So that's what I'm looking at this week. Try to avoid the euphoria about just everything simply going up and you can get complacent. That's not how I'm looking at it. So that is what I'm looking at this week. If proven wrong, no big deal. Switch and jump on this Trump trade and we can ride higher, but I think that we need to be cautious heading into this week specifically about chasing euphoria. All right. So that's what I'm looking at over the next week or two. I'll have more information for you next week. Thank you very much.